Good day, everyone. Trust you're doing well today. Today, we're talking about Fidelity Bank latest technical and fundamental analysis. Now, we're going to look at Fidelity Bank from two different angles. First, we'll look at the business itself. Is the company actually doing well? Then, subsequently, we'll look at the price chart to see what the market is trying to tell us. And by the end of this video, you have a much clearer idea of whether Fidelity Bank still deserves a place on your watch list. Let's get started. Now we'll begin with the business itself. One thing every investor should ask before buying any stock is very simple. Is this company actually making more money? Because at the end of the day, share prices can move up and down, right? Because of emotions, news or market excitement, hype. But over the long run, businesses that continue making more money usually reward investors. So how is Fidelity Bank doing? Well, the latest numbers are actually very, very impressive. In the first quarter of 2026, Fidelity Bank reported gross earnings of about 434.95 billion naira. Now, here's where things get really interesting because when you compare to the same period last year, Fidelity Bank gross earnings grew by about 38%. This is a very healthy increase. It tells us the bank is growing its business instead of standing still, and that is exactly what investors likes to see. But earnings are only one part of the story because another thing caught my attention. Recently, Fidelity Bank gave nearly 30 million shares to members of its staff. At first, this may not sound like a big deal, but think about it. If you worked for a company and own part of that company, wouldn't you want it to perform well? Of course you would. When employees become shareholders, everyone wins if the business grows. Management usually doesn't do this unless they believe the company has good long-term potential. Now, this doesn't guarantee the stock will go higher, all right? Nothing in the stock market is usually guaranteed, but it does show confidence from inside the company. And that's something smart investors always pay attention to. There is another interesting development that many people missed, which is the Nigerian Exchange recently upgraded Fidelity Bank from what is called a small price stock to a medium price stock. Now, that might sound technical, but it actually does mean the stock has stayed at a higher price long enough for the exchange to officially move it into another category. Think of it like a football team, getting promoted to a higher league because they have consistently performed well. The promotion itself doesn't make the team stronger, right? But it shows they earned their place. That's exactly what's happening here. Now, let's talk about something else many investors do ignore: trading activity. On some recent trading days, more than 24 million Fidelity Bank shares changed hands. That's a lot. Now, why does this even matter? Now, imagine trying to sell a car. If only one person wants to buy it, you probably have to accept whatever price they offer. But if 50 people are interested in that same car, you have more choices. The same thing happens in the stock market. When millions of shares are being bought and sold, it tells us that there is plenty of interest in the company. That is called liquidity. Now, before we get too excited, let's also look at the risk because every investment has risk, obviously. Now, one issue investors should continue watching is, funding costs. What exactly does that mean? Banks doesn't lend out free money. The money they lend mostly comes from, customers who keep their savings in the bank. So to attract those deposits, banks often pay interest. When interest rate goes up, banks have to pay more to customers. That extra cost is called funding costs. If those costs keeps rising faster than the bank's income, profits can become smaller. So this is definitely something worth watching. There's also another area that deserves attention: impairment charges. That sounds complicated, but it's actually very simple. Now imagine you lend your friend 100,000 naira. After several months, it becomes obvious they may never pay you back. You probably accept that some of that money is gone. Banks face the same situation as well. Sometimes borrowers fail to repay loans. When the bank expects that to happen, it sets money aside. That is called an impairment charge. Now, higher impairment charges can reduce profit. Right now, for Fidelity Bank, they are increasing. So investors should continue monitoring future earning reports. Now, let's move to the chart. Because even if a company is doing well, timing still matters. This is where technical analysis comes in. Now, for the past few weeks, Fidelity Bank stock price, has stayed between 20.50 naira and 21.80 naira. Basically, the 20-day EMA is around 20.49 naira, while the 50-day EMA is about 20.17 naira. Now let's put everything together. Fundamentally, Fidelity Bank is still showing strong signs. Revenue is growing. The bank continues attracting investors' attention. Trading activity remains healthy. Management has shown confidence by giving shares to employees, and the Nigerian Exchange has recognized the bank's improved market position. Those are all positive developments. So if you're following Fidelity Bank, don't just look at today's price. Watch the business, watch the quarterly earnings, watch the trading volume. Lastly, if you want signal on when to buy this stock or when to take profits from this stock, I have a Telegram community where I share frequent market insights to enable you beat the market. So if you're interested, you can find the Telegram link in the description box of this video. Now, if you gain value from this video, please like and subscribe so you do not miss my next video. All right. Have a nice day. Bye.